Hello and welcome. You're watching IPO Review, and today we are going to get some insight into the initial public offering of CMS Info Systems. CMS Info Systems IPO opens on December 21st and will close on December 23rd. The company plans to raise 1,100 crore rupees through an initial public offering, which is entirely an offer for sale by promoter Cyan Investment Holdings. The price band for the issue has been fixed at rupees 205 to 216 per share. To talk on the IPO, joining me now is Mr. Rajiv Kaul, Executive Vice Chairman, Whole-Time Director and CEO, CMS Info, and Mr. Pankaj Khandelwal, President and CFO, CMS Info System. Welcome, Rajiv and Pankaj.
Thank you, Jitu. Thank you for having us here.
Our pleasure. My first question is for Rajiv. Rajiv, CMS Info System is at the right place at the right time and is cashing in on the ATM boom with advanced technology offerings. Tell us something about the business model you follow and your vision and plan.
Sure. Jitu, when we started the company, our whole focus was on building a very strong platform which can be a strong partner to the BFSI sector in India for their outsourcing needs. Banks will continue to grow as Indian economy grows, and they will need strong companies to work with and partner with. Over the last decade, we have created a variety of business lines built on a very strong distribution network where we cover almost 97.5% of India's districts. Very strong logistics network covering 15,000 pin codes every day. On top of which we have launched technology offerings in addition to cash management services so that we can become a one-stop integrated partner for banks as they roll out various initiatives to reach out to their end consumer.
Mm-hmm. So, Pankaj, did the things change for CMS during COVID-19 crisis? Good currency management became an important prerequisite for them.
So, we had experience of the demonetization, and during demonetization, we have learned so many things. For the last several years, we have done multiple efforts for the technology, which will help us to improve our margin in this COVID period. Mm-hmm. During this period, in FY20, we grew around 21%. In FY21, despite the mobility restriction and the various things, we could able to arrest our decline to only 6%. So we have diversified business, which help us to achieve this level. We can improve our margins by 400 basis points during this COVID. With the help of the technology, the business makes the new contract we won, which has resulted in the EBITDA margin of around 23% in this year.
Mm-hmm. And would you continue growing at this pace going forward?
I think you know that we can't really forecast our future growth rates or whatever. All we can link to is the past and give you an indication. FY19 to FY20, we grew our revenue 21%. In the first 5 months of the year, for the results which are updated now in the RHP, we've had, and if you take the 5-month revenue and you analyze it for the year, just assume it's a straight line. It normally isn't, but let's assume a straight line. That itself is a 15% growth. Keeping in mind that we had COVID wave to impact also for a majority of this period. So I think we feel very strong about the broader opportunities as banks will invest for refreshing and upgrading and expanding their networks. Strong quality companies which can offer them a variety of services put together should benefit a lot from that opportunity to serve them.
Mm-hmm. Rajiv, what are the key business segments that companies focusing on currently, and are you exploring new business areas?
Sure. So we have, we have our older business, which is the cash management business, which is almost 65 to 70% of our revenues. We incubated a variety of services around the technology aspect of managing ATMs, from both the product automation to the managed services and also to the software which runs on the ATMs. That business line is now 30-35% of revenue in a period of just 4 or 5 years. We last year during COVID itself incubated another line of business, which is around the entire remote monitoring of an ATM site, which is about energy management, managing the safety of consumers, having triggers and alarms in case there is something wrong at the site. So I think that's a new business, which is a totally IoT and cloud-based software. And it's sort of a tech SaaS business we have built around the ATM network, which we hope to expand to bank branches, to gold loan branches, and then later to we want to cross sector out of BFSI and make it a horizontal business, because it's a technology solution, right? You can take this to restaurants, retail stores, solar parks, many other sectors. It's a fairly large market out there. And I think we are, as you said before, we are at the right time, right place with the right solutions, which have scaled and proven themselves. And we hope to benefit from the opportunity which we have in front of us. So yes, I think we hope to grow reasonably well going in the future. We are a company which is focused on revenue growth, but along with it, we are very responsible for making sure that we run a profitable company, a highly governed company, also with strong cash flows.
Mm-hmm. How difficult is for CMS to retain clients? I mean, client retention is something that you really would have to be focusing on, because you have a tough competition coming on.
So any B2B company is, and I'm saying this is across sector. It could be an IT services company, it could be in other sectors. It is about the value proposition you put. The value proposition is a mix of quality first, right? Nobody compromises in quality in B2B. It's the quality, it is your network, it is your technology skills, it is your pricing, and how does that all mix come together to help your customer succeed, because they have a final customer to also deliver a service to. Given here, you are serving the broader Indian population as your consumer of the bank or a customer of the bank. I think quality, governance, risk management, and also the network is phenomenally important for a bank to choose. We work with every bank in the country, every bank, and we retain all of them. I think we haven't had a customer who has walked away. We have no bank which has walked away from working with us, because we need to make sure that we can deliver and keep improving on our technology offering and also our quality of services.
Pankaj, what is the kind of cash that you manage on daily basis and annually?
So our throughput in FY21 for the ATM and the retail cash management around 10 lakh crore rupees.
Okay, and this is expected to go higher as you get into more and more cities and towns, right?
So I think it's a combination of both, right? The cash in circulation is increasing, and therefore the volume of cash you need to manage also increases. And secondly, as you indicated, it's not only getting into deeper in the towns, it's also there is, as our market share increases, which you have shown in the, at the end of last year, you haven't shared the data. As we get to do more work and as more market share shifts, you will end up doing more work. But yes, I think this is the overall economic growth potential of the country over the next decade, right? Everybody is very excited about the next 10 years for India and what it can do. An Indian consumer will do well. An Indian population will do well. The per capita GDP will increase. As the per capita GDP increases, the consumption will increase. As the consumption increases, it will be from all models, all mediums of commerce, whether it is cash or digital. And therefore, companies like us are, I think, finally, end of the day, through our banking customers, serving the Indian population.
Does things change for CMS with digitization? Because now we are entering into a crypto world.
Sure. Yeah, we have seen many disruptions. It's nature of the world today. It's a very volatile world for quite some time. Every industry is going through different levels of disruption. Somebody's trying to disrupt you. You're trying to disrupt somebody, right? So I think that's in the end. Finally, I think it's all about how habits and patterns change. And we see still a big opportunity in India in the formalization of the Indian economy. So when we are serving retail clients on behalf of banks, today organized retail is a very small fraction of the overall market. Now, when people say, will cash management succeed and survive for 10, 15, 20 years? I said, if India formalizes within the next 10 years, then maybe you can say after that, there's no more growth opportunity. But if India will take 10, 15, 20 years to grow, and formalize from the informal sector to the formal sector, because that's a shift in trend which seems to be logical, right? Or seems to be predetermined, preordained, we don't know. I think that has a massive tailwind opportunity, which is a long-term 10, 15, 20-year secular growth opportunity for our retail business, because the retail solutions, the ATM channel has evolved rapidly from just logistics of cash to technology of cash there. The retail sector in India is at where the ATM sector was maybe 7, 8 years ago. And as that sector gets invested in by the e-commerce companies, by the large retail chains in India, the technology offering of managing cash at a retail store will also evolve rapidly. And I think that will present a massive opportunity of growth from a long-term perspective.
Pankaj, how do you plan to grow the key business segments? I mean, the kind of investment and the kind of returns that you expect from the key business segments.
So you will see that our managed services business, which is around 364 crore rupees in last year, in last 15 months, we got an order of around 2,000 crore rupees.
Order book, yeah.
Order book of around 2,000 crore rupees,
Okay.
which will help us to maintain or improve that business. Our cash management business, which is there is a lot of regulatory related price increase, and the outsourcing in the ATMs are increasing, which you can refer to the RHP, wherein the Fortune 7 given that 2,800 rupees increase in the ATM and the 1,000 rupees addition increase over the rate, if you calculate for the ATM around 8,000 rupees, which is around approximately 50% rate increase, and the outsourcing of around 1 lakh ATM over 2,55,000 or over 1,55,000 ATMs. So both the business has poised to grow. Regulatory trending, outsourcing, price increase, the orders in hand, and the technology development we had in the managed services business. In the last year, we have IoT-based remote monitoring services. We got a lot of orders there. So by adding all these things, there is a lot. We believe that there is a lot of opportunity available to us.
Rajiv, one last question. What is the kind of spends that you have on the technology front? I mean, technology is something which is has to be there, no?
Right. No, so I think we have two types of technology spends, right? And I can't give you the breakups exactly here right now, but one is just investing in technology for automating our own operations. And that's one big reason why our margins in a COVID year improved, because we had been working on automating our backend processes, our own logistics network, how we do the route mapping for a couple of years. It just luckily came together in February, March of 2020. And during COVID, we are able to benefit a lot from adopting some of those internal automation mechanisms. So I think that's one part. Now, this is a regular part of our spend, and we've been doing this for the last 7-8 years. As you know, I come from a technology background myself, and I think just building in a lot of this work at the back end, there's a lot of technology which goes into running any large logistics network, whether it's an e-commerce network or a cash management network. And we are the best in the country. We're amongst the best in the country for that. The second part of technology spend goes in, and when we work for banks, when with State Bank of India, we won a very large multiple 100 crore contract for multi-vendor software for their 46,000 ATMs. Again, that needs a lot of technology investment to build a high quality software which can run on the biggest bank in the country. Third is when we make tech investments in companies, in startups, right? So that we have access to technology which we can use to improve our offerings. So I think our spends are of three types. I can't disclose the numbers and spends because one, they vary, but I think that's how we think about our business. And we can't, going forward also, I think that's something which is the way we think, which is we will keep investing in startups which can offer us technology solution access, because everything you can't build internally. There are a lot of exciting, good startups in India doing very good work. They have the talent pool, they have the wind behind them, and we would love to partner with them in helping them get the solutions, access to the large banks, and us also being able to adopt the solutions.
One last question. Why did the issue size come down from 2,000 crores to 1,100 crores? I
think there are two things. Number one, if you think about the OFS, it's an OFS, right? There is no other capital. It's an OFS, therefore this has no impact on the growth potential of the company. Right. Secondly, if you look at our 5-month results, and again, I'll go back to saying, if you extrapolate those results on a straight line, it is a 15% revenue growth, 20% PAT growth in a period where there was a COVID wave 2 significant impact. I think the growth potential of the company is getting better and better. And at this stage, for our shareholders and our promoters, Sion, to dilute more doesn't make sense. Thank you, Rajiv. Thank you, Pankaj, for your time. It was a pleasure speaking with both of you, and we wish you all the best for your forthcoming IPO. Thank you so much. Good talking to you. Thank you so much for your time.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.